is happening? Okay, welcome, you beautiful human beings, guys. Welcome to the DVDM Markets Daily Dose. From wherever in the world you are joining us from, please drop some love in the comments. Let us know where you are joining us from. All right, beautiful guys. So we have NFP tomorrow. All eyes, everything is on the site of NFP. There's quite a bit happening in the markets. However, today is going to be slow across the board. We've seen this in the past, high impact news events, and just where this NFP is in the relation of the world economy and what's happening in the US, interest rates, just employment data, all the data we've seen over the past few days. We do generally see a bit of a quieter day, but this is not expected to remain. We could see anything happen over the course of today. We just do anticipate a slightly slower market. So let's just quickly see if we have Limpopo in the house. Let us know where in the world you're joining us from. A ton of clients are going to watch this after the fact. So again, if you're busy running around, you're watching this a little bit later, we're going to take you through everything you need to know for NFP tomorrow, as well as I promised you guys some really cool tools in order to deal with NFP, how to open and close trades far easier. And I will be showing you that. Also stick to the end, because if you're part of Premium Plus, I will be announcing the details for the Saturday training session. We're going to be going over the golden nuggets, the exponential cash multiplier strategy, as well as some other things, some really powerful tools that if you are in Premium Plus, it's going to take your trading to a whole new level. So let's just jump straight in. Let's just chat about what the markets are speaking about, what people are speaking about, what that means for us, and how we can potentially deal with this. Now, the first article that I'm going to show you is actually quite a bit of a funny one. If you guys remember from Tuesday, there was a massive article talking about September is, bad month for stocks, blah, blah, blah. We see today a little bit of a turnaround, right, in some of the news and some of the sentiment around the board. And again, you guys will know that we've had that massively bad dollar data this week that has essentially pushed all of our views. We saw that, essential potential dollar drop that I was speaking about on Tuesday, as well as Monday, as well as the whole of last week, really. We started to see all that news come out and support that weaker dollar. As I've said over the past couple of weeks, potentially the past month, is that we are in a season now where all of the mechanisms that were used to boost the dollar, interest rate hikes by the US, the quantitative easing cycle coming to an end, all of these different factors are essentially not supporting a stronger dollar anymore. And again, as we start to see things come back into normality, or at least in this post-pandemic sort of normality, the dollar starting to potentially lose value. The price action was there long before anything else, but now we're starting to see these media shills backing, oh wait, September might not be bad, right? Where in Tuesday, they was posting, oh, September is going to be a horrible month, where I explained to you guys as well that yes, there's more than half of the Septembers, go back 30, 40 years, that are not necessarily great for the stock market. But if you look at where we are positioned from a dollar data perspective, just looking at the end of August and potentially the start of September, it's looking pretty good across the board. So that's one item I wanted to speak about. So when you see things like this, just take it with a pinch of salt. It could literally mean that out of the last 200 Septembers, 101 of them was a downturn where 99 of them was positive. So always take info like this with a little bit of a pinch of salt when looking at it, right? Now, there was an article yesterday, and this is essentially something I want to talk about. And this is something that, for those of you guys who've watched some of the statements and the press releases that we've dealt with on Powell, this has been something that's been spoken about in a little bit of detail, but I think a lot of people have potentially missed this, right? And this was the fact that a lot of people were asking Powell and the Federal Reserve, when raising interest rates, how certain are they that they're not over tightening, that they're not making corrective measures that are going to essentially damage the economy? And Powell, as well as other representatives from the Federal Reserve, said, hey, listen, the things we do today have a ripple effect into the future. And they're looking into the rearview mirror, making decisions on old data and making implementations that have future consequences. And this is what I think economists and a lot of people around the world are coming to realize in this season, is that a lot of the effort the Federal Reserve, the US Federal Reserve, has done with regards to tightening interest rates, etc., the way they've handled things, we're only now starting to see the consequences of those actions, right? And there's a lot of articles floating around where the main thing to confirm now is, will the hard data hit home, right? And they're referring to hard data confirm. Hard data confirm means that, we're seeing all these unemployment data figures, we're seeing the lower CPI and interest rates, but will it translate into hard data? Will it translate into lower sort of CPI rates or inflation rates? And will this translate into lower employment figures, right? That's what NFP is about tomorrow. So if we see those numbers confirmed, again, this is going to show and be a massive vote of confidence that the efforts the Federal Reserve has done and been putting the US economy as well as the rest of the world under this immense pressure is finally translating into results, which would ease the Federal Reserve's objective, or at least ease the pressure of them forcing another interest rate hike. Interest rate hikes, as you guys have known and as we've spoken about in the past, have led to the stronger dollar over the course of time. So what does this mean? Why are we talking about a stronger dollar? What does it mean for you if you're brand new to trading, or if you've just joined us, or you haven't been doing this for years? Why is this so important? What does that mean for us, right? So as many of you know, the dollar is essentially the dominant currency around the world. Whatever the dollar does, there's massive ripples and impacts across commodities, across stocks, across different currencies and different governments around the world. When we're able to predict and look at what the dollar is trending and potentially going to do, considering it is the strongest component in many either items like stocks, currencies, commodities, oil, it then gives us a very high likelihood of what these instruments are going to do in the future. Considering that we've seen a downturn in a lot of these common instruments, whether it be indices, whether it be commodities, whether it be FX, we can see that the primary driving factor specifically over the last year has been the dollar. So looking at the dollar turnaround means it gives us an immense amount of opportunities across the markets to take advantage of. So quickly, let's look at that. Let's talk about that. But before we do, I want to quickly just touch on some of the economic data that we do have due today, right? This is coming out in the next 21 minutes or so, but we have some PCE price index data, and we have some initial jobless claims data, right? So we've seen a ton of initial jobless claims data for the US, right? I don't know how many of them in a month, but it really seems like more than 4 or 5. But again, this is just going to be, you know, if the claims are higher than expected, right, this is going to be bad for the dollar. And I do expect today to be higher than even the economists forecast, right? So the economists are forecasting 235,000 Americans would have filed for some form of unemployment. And again, if more and more people are filing for unemployment, it means that, you know, times are tough out there. People aren't finding as many jobs as they, you know, should. If you guys understand and know from the past couple months, the US is at its lowest rate of unemployment in basically all of history, right? Whilst having gone through the pandemic, etc. So starting to see that more and more people are filing for unemployment, again, is meeting one of the Federal Reserve's mandates in spot price stability. In order to calm down and cool inflation, they need a less hot labor market, right? Because at the moment in the US, it's super easy. There's more jobs than there are people, and people can pick and choose, you know, where they want to be. And they need that cooler labor market to meet the reserve's requirements, price stability. So again, a higher than expected initial reading on this jobless claims would mean a weaker dollar, further supporting a lot of the positions that we're looking at and or in. You're still in gold. We've absolutely smashed it. We were part of yesterday or the day before's US 30 buy. We absolutely smashed it. This is all due to that weakening dollar. So speaking about the weakening dollar, that's probably where we're going to start this afternoon as we move a little bit further into what is the plan for NFP, how are we going to deal with that, and what are the special tools that I am going to be releasing to you guys in order to just make your trading lives a little bit better and a little bit easier in terms of trading some of this high impact news. So before we get there, let's quickly switch over onto that dollar index. So again, the dollar index, for those of you who are new to the dollar index, is essentially a map of how the dollar is performing against all other currencies, right? This includes the euro, the pound, the yen, as well as gold and other items together. Most heavily weights against the euro, the pound, as well as the yen. So again, we were speaking about in the beginning of the week, the fact that the dollar should come off of this high that it's currently sitting in. It's only beaten this level in the last, let's call it, you know, the last couple years. If we switch over to a weekly time frame, you know, since 2017, so let's call it the last 7 years, it's only gone through this level once, right? Every other time rejected. So a major resistance level, certainly a supply zone for a lot of short opportunities. Now, this comes at a time, and again, we often in trading look for, and you guys would have heard me calling this the perfect storm. And a perfect storm is when all of these variables come together, when we see price action hitting a level of resistance and or support, we see, you know, some economic data, we see some fundamental data, we see some political pressures that is essentially culminate in this once in a year, once in a quarter type move. And I think that's what we're seeing right now. Again, this is all very, very dependent on the NFP tomorrow. The NFP, for those of you who know or don't know, is essentially one of the biggest releases on the first Friday of every month that basically gives the US label, the US employment statistics for the month. How many people filed for unemployment, how many people have been employed, how many new jobs have been created, average hourly earnings, etc. And they look at this on a month-on-month base and a year-on-year base. So again, looking at all the weak dollar data we've received thus far, if NFP does not provide a positive outlook on the dollar, so we see higher amounts of people unemployed and less people employed than what economists predicted, this will further cause a downward shock on the dollar. So you're saying, great, Dane, a downward shock on the dollar. What does that mean for us? What does it mean for us as traders? What does it mean that we can potentially do? There's quite a few different things here. So first and foremost, we're going to start off on the FX side. Euro USD, we spoke about early in the week, right? The Euro USD setup was a long-term setup. There's a daily time frame, but anybody who says to you markets are random, price is random, it's gambling, there's no science to it, go tell them to go play a hide and seek in peak time traffic with a couple shots of tequila, because they're absolutely nuts, right? Look at this beautiful price action structure, totally predictable, math is there. Anyways, on a daily time frame, we pushed down to that 78.6. We've been speaking about this level and it coming for quite a while, but once it got there, we got that really, really bad US data, and I didn't expect the US data to come so early. I was under the impression we would wait for NFP to get that. Now we got a push out. We were speaking with our leadership group, and Tumelo, who really enjoys the FX side, said, hey, listen, shouldn't we be buying this? And I said, absolutely. If that's suit your strategy, go for it. I just want NFP data to confirm a sustained weaker dollar to have a look at that long-term move, right? Obviously, the weaker dollar data, we got Euro USD popped out to the top side, but I'm looking for a slight pullback, or at least Euro USD to remain above this market structure before looking at some sort of long. Now, to give you an example of the opportunity here on Euro USD, right? Again, we've met the requirements, we've hit support, we've got above support, we've broke out of the immediate structure, we've now technically on that retest time or zone. If we get that weaker dollar tomorrow for NFP, and remember, we will be trading this live, you're part of Premium Plus, again, we have an opportunity for Euro USD to run 400 plus pips to the top side. Now, Euro USD being one of the cheapest currencies to trade, 400 pips on a standard lot means $10 per pip. That's a $4,000 trade, right? So almost 100,000 Rand per position on a trade that you can take, move your stop loss into profit and leave to run over the space of days, weeks, maybe a month or two, whatever it may be, right? So there's immense opportunity in FX side, provided you're patient, provided you manage risk accordingly, right? So again, that's all going to come down to risk. The same thing that we're seeing on Euro USD, the dollar is the common factor for weakness here. And again, we want to see that confirmed weakness for the NFP, the non-farm payrolls tomorrow. And this will give us some really good long-term opportunities. Again, we are going to be trading that live tomorrow. The same thing can be said for USD CHF. USD CHF, we've been looking at a short opportunity. It did break out because of the dollar weakness that we saw over the past couple of days. And again, I wasn't ready to take this because I want that NFP confirmation for that weaker dollar. Now, the reason I say I want the NFP confirmation, right, is for a couple reasons. The first reason is that if NFP comes out tomorrow and the dollar comes out super strong, you can imagine a lot of these price action formations will break, right? So that's why we look for confirmation. Again, if we get NFP data that is sort of 50-50, where we're starting to see, unemployment went up, but, meaning more and more people unemployed, but more jobs were created than expected, we can see a little bit of a whipsaw, a bit of a spike, and then markets need to decide for themselves what they're going to take as of value. So that's the reason we wait for that. But again, tomorrow, if we get that weaker dollar data from the NFP, that will be a massive short opportunity. Now, looking at gold, again, we've had some really good price action on gold. This is a trade that I'm holding, and pretty much since week before last, was it last week, week before last? I think it was on last week, Tuesday, we looked at a gold buy, right? And we took that gold buy. It was part of Premium Plus. If you're new to Premium Plus, you can scroll back to, I think it was the 22nd. In any event, gold is a long-term trade, right? Currently at the time of speaking right now, we are running well over 560 pips on gold, right? Which again, at $10, if you took a standard lot there, you're talking about $5,000-6,000, 100,000 Rand trade per position, right? This is one of those positions that a few of our clients have made a couple million on, and collectively, I don't know how much we've made as a group, but there's a lot of money that's been generated out of the swing trade, right? Now again, should we get that weaker dollar, it is basically going to mean that gold has no limit to where it can go to. But I did get a question in the group of saying, okay, how do we deal with gold, and how do we know, when gold is potentially going to reverse, when it's still in bull cycle, when it's in bear cycle, etc. And that is the beauty of Fibonacci. So again, if you guys have not been through the academy is free and available to you to go and learn. Fibonacci is part of it. And ultimately, when we look at the fib levels here, right, we can see that gold has hit and struck into that 61.8, that perfect golden ratio. And again, we need to get through that 61.8, but I do think between today and NFP, we can look at some sort of retracement, right? The question in the group was, how would we know that gold's going into a bear cycle or selling cycle as opposed to a continuation or just a retracement, right? Well, super simple. First thing being is we've got some beautiful price action here that I've drawn out on gold. The second thing is that we have very, very clear levels. These red highlighted levels below us will be, that's the 50 fib level, that's the 38.2. So I do expect, and I would expect, a pullback on gold to the 1934 mark. So a good 120 pip pullback. But further than that would be the level just prior to that, which is the 38.2. So a 1922 pullback is still a possibility, and still would not mean that gold is in a selling structure, but it's just simply a correction of the moves that are happening to the top side. So I don't know if that answers the question. I'm not 100% sure who it was who asked the question. It might have been Troy. I'm not 100% sure who asked the question, but I hope that answers your question. At a 1923 and 1922, that's where I would look for additional buys, and a failure of that level, we would obviously look at selling this market structure, right? So pretty simple, pretty straightforward. So for gold for today, and again, just looking at where we are just from, waiting on NFP, I don't have too much expectations other than, again, if you're looking for a scalp and an opportunity, very, very simple. If initial jobless claims come out higher than expected, so reading of 235,000 plus, super simple. For those of you who are new to fundamental trading, it's really, really simple. We get a few data releases over the space of a month that are high impact, and that will be things like gross domestic product, CPI, PPI, jobless claims, etc., employment data. If these numbers are positive for the currency, we would then obviously deal with that as a trade setup. In this particular case, a weaker dollar or a higher number of people filing for unemployment would signal a weaker dollar, thus would signal an opportunity for us to continue to the long side, continue buy opportunities on gold, right? So if you're looking at scalping, I would simply look at that, and we've got a pretty good area of resistance above us, right? Something a little bit like that. So a breach, so two things. If that data comes out higher than expected, that's a great thing, but then we want to see price action move, or we want to see price move and echo what we're seeing on the data side. So if we see a price move here, $1,947 or above to an ounce of gold, if that data comes out negative for the dollar, then I would then jump in and put in some more buys for a scalp type perspective. But again, we are already in some of these trades on bigger accounts, so I'm not too interested in scalping out anything for today. Now, really, really interesting opportunity available to us on US30, otherwise known as the Dow Jones, and super simple. For those of you who are looking at this, who want to trade this, who just want a bit of information, we have two things we need to take account for here. So one of our best sells for August happened when we broke out of the zone. If you guys remember, we were essentially in a descending triangle. Again, this is part of the academy, part of the price action formations we generally look for. A descending channel started to form between 50 and 70% of its formation, broke to the downside. I still remember Tumelo in the group when we were pointing out before we issued this to Premium Plus as a sell, it said, "Oh, these short trades I don't really like." And I said, well, hey, this little trade, right, could be a really long trade. And it was. Ultimately moved out to almost 10,000 pips. But in any event, that descending triangle broke out. We went down to that low. As I said to you guys earlier in the week, US30 has this massive amount of bull momentum on a daily time frame, right? Really good support running through the whole price of US30. And again, we dipped below. We, went for that little bit of a liquidity grab, if you will. Markets created that liquidity and we're on our way back up. This zone on US30, right, this 35,050 almost on the mark, is a major resistance zone, right? So the fact that we are cruising almost through it, right? I'm just on a smaller time frame here, 15 minutes. The fact that we are cruising through it into this zone tells me there is a lot of strength in the stock market right now, right? So all these naysayers about September being bad and about stocks must fall and there's this bubble, price action isn't saying that. And sometimes we just need to stick to the price action, right? Not worry about anything else, not worry about the news. Again, for those of you who know, Wall Street owns most of the major news outlets. So in most cases, ignore the news, ignore, some of these sort of articles that are providing insights into the markets, ignore it. Just look at the price action. So US30 is in a clear, bull market right now. Again, if that data comes out in the next 6 minutes for initial jobless claims and it is positive, we will see that continuation spike on US30 to the top side. USA 100, very similar thing. The only difference is we have exact levels here. And again, this is the beauty of Fibonacci. If you're not using Fibonacci and you're a trader, I don't know what you're doing. I'm not going to say anybody should take a shot at tequila and go play in traffic, but you should be using Fibonacci if you are trading financial markets, right? So let's consider this, right? We've had USA 100, otherwise known as US Tech or the NASDAQ, massive bull market, has been in this retracement, is ultimately making these moves up. Fibonacci will give you a great guide as to where are those exact support / resistance zones. There was someone also asking in the group for, strategy, price action, what do they look for in order to get into or get out of a trade? And this is all it is, guys. It is not immensely complicated, right? So as an example, in US 100, we have all the levels of resistance and or support. So as an example here, we can see that US 100 Tech, and I am currently on a 4-hour time frame, has punched through on the 29th, right? It's come back, sat on the 61, so punched through 61.1.8, which had failed previously, sat back at that price, 15,343, has made that next attempt to the next zone, which is just sitting slightly above us. And again, should US 100 punch through that zone, if you go back in time, you'll see how well that zone has been respected, right? So we know it's definitely a supply zone, a resistance / support. Again, if that data comes out in the next 5 minutes and it's weaker on the dollar, US 100 could very likely punch through here and find support somewhere above the 78.6, clearly in bull territory. Now, what we like to do specifically prior to an NFP, prior to a big data event, we want to be in a position that we are profitable in the direction that we have a high likelihood potential of being. And I do personally think, and again, this is not financial advice in any way, shape, or form, this is my personal opinion and for educational purposes, but I believe we are going to see a negative NFP tomorrow, meaning a weaker dollar. So again, I want to be in as many long opportunities on indices, commodities, and currencies as I physically can, where, as an example, Euro USD, right, we're looking at a long there because 1 euro buys more and more dollars the weaker the dollar is. So I want to be in as many longs where the dollar is the quote currency, and I want to be as many shorts where the dollar is the base currency. So USD CHF, dollar is the base currency. We're looking at shorts there because of the weaker dollar. So in the case of indices, we want to be in as many long positions due to the fact there's a high likelihood this could be a massive fail from a data release and NFP side. Again, you guys know NFP, it could be a massive surprise. So pretty much it's anything goes, right? We could see a whipsaw, we could see messed up data, but it's about how we prepare for it. And as long as you're going with risk management intact, you are good. Now, again, I don't recommend NFP for $100, right? If you have a $100 trading account, you shouldn't really be trading NFP. And that's just the honest truth, guys. You'll see a lot of people out there saying, you start trading with $50, $60, $100, you buy their course, you buy their robots, whatever you pay for their signals. And they're saying, you can make millions of $100. It's probably not going to happen, right? Real trading starts from $1,000, $5,000, $10,000 plus. And so it doesn't mean you can't trade NFP. It just means your margin is very, very small. You've got to be very strict. You're going to take one trade at 2 or 3%, and that's going to be your account, your margin maxed out. But I've got a really great tool for you guys that I do want to show you, and I'm going to be showing you this after the ad break, and then I'm going to be speaking about what exactly we're going to be doing this Saturday in terms of training, right? In terms of the golden nugget, there's a ton of you who've been taking it over the past couple of weeks, but there has been a slight adaptation, and I've set up very specific parameters for you every single day between 9 and 10 o'clock to take massive advantage of the golden nuggets. And I've cracked the code, which I'm going to be giving you guys for free on Saturday, as well as some other items like that. So we are going to be doing a really quick intermission, probably about 30 seconds. Gives me a chance to have a little sip of water here, but more than that, allows me to change batteries and show you some of the tools I'm going to be giving you guys for Friday for trading NFP, making sure your risk is on point and not messing up your account. So sit back, enjoy 30 seconds of good music, and I'll be with you guys back, and we will essentially jump into what are those tools. Drop in the comments below, what do you think is going to happen for NFP tomorrow? Have you traded NFP? If you have never traded NFP, I'd love to hear from you. If you've never traded, put your thumbs up. If you have traded, let me know. But let's do this. 30 seconds, I'll be with you, and I'll show you what tools I'm going to be giving you guys after the break. Beautiful. Okay, all right guys, so as I promised you guys earlier in the week, I have been thinking about developing a tool for those of you who, so I received this question a few times. I actually received it a few times after making the announcement we're going to be developing this tool. So I see this quite a bit with clients who, you know, able to scalp or take $100 to $1,000 or $100 to a few $1,000s, but something happens along the way where they struggle to maintain that, right? And I wanted to develop a tool that helps people to be better at risk management, right? But before I show you that, let's quickly have a look at the fundamental data that just came out. Okay, so initial jobless claims are less than expected, but the weekly average is slightly higher. Continuing jobless claims is slightly higher. Personal income, slightly lower. Let's just go through everything. Core PCE price index as expected, personal income. So a bit of a mixed bag, right? I wouldn't necessarily take this as massively positive for the dollar, but again, we also have continuing numbers that will contribute towards NFP. Also have some 4-week averages that will contribute towards NFP. So might be seen as temporary strength of the dollar, but again, the great thing about being a trader is we can see this in real time, right? We don't have to guess, we don't have to assume, we can actually see it. So we're dropping down to a minute time frame on the dollar index just to see what is the dollar, or what is the market interpreting this data. Because again, remember, our opinion on what the data is and what it will do is irrelevant, in the sense that we can have certain assumptions, we can have certain predictions based on past data. It's done this. This is the data, this was the release, this is what it did. And so this has happened 10 times, 9 of the 10 times it's done this, and we can make certain assumptions. But the beautiful thing is we can allow the market to decide, see that, and then follow through and trade with the markets against, as opposed to trading against it. So looking at the initial reaction on the dollar index, it certainly seems like a little bit of a negative, but I think the dollar, my interpretation would be the dollar would take this as a quick gain, a quick positive, considering some of the other items are positive and only some of the averages and continuing numbers are slightly negative. But I may be wrong. The markets may say, well, hey, that's happened already, that's past data, that's already happened, we know where the dollar is. And the markets might be more focused on the future, and the future will be, you know, personal income has dropped, continuing jobless claims is higher than expected, jobless claims average is higher than expected. So we go through these seasons where markets take today's data as, you know, the truth, and this is the most important. Then you take days where, or you have days where the market discounts what's happening or the data we're receiving on what has happened and pays a higher attribute or higher weighting to data that reflect future information. That might be what we're seeing here today. So let's just double check. So it is going to be taking that as a negative, and that means two things. First thing meaning we could see some potential breakouts here on US 100, US 30, right? US 30 for me already seems in breakout territory. But what I would be then waiting for is the New York Stock Exchange to confirm the direction is positive, and we might see a very bullish New York Stock Exchange, right? I think the rest of the world, I think there's a high level or high degree of hope that the dollar will come out negative tomorrow. But I think further than that, I think the whole world is waking up to the fact that if the Federal Reserve pauses the rate hike in the next meeting, this is going to be extremely good for stocks, and a lower than expected or weak NFP for tomorrow will prompt that. So I think the markets are summarizing that as a whole. But anyway, we will get back to that. If I see markets move again, that's a brilliant thing about being part of Premium Plus. If I take a trade or I see a trade worth taking, I will share with you that trade that I take. But moving back into what I was speaking about, I promised you guys a tool that would make your lives easier in order to be able to manage risk and trade specifically in high impact events and just general trading as a whole, right? A lot of people, it's pretty easy. When you have $100, what's 3%? $3. Does your stop loss equal $3? Yes or no? Great. You set the lot, you set the stop loss, you set the TP. But there's an easier way of doing things. So initially, I reached out to the development team, said, hey, this is what I want to develop. They sent me a bunch of code, said, hey, this is what we can do, but have you seen this? And they sent me something back that is a free tool that's currently sitting on the MT4, MT5 forums. And I had a look at it, and it's exceptional, right? In the sense that we are going to develop something very similar, fine-tuned for what we would like to do, as well as it also holds a bit of a trading journal for you. So a really great way to export trading information, etc. And you can mark there, was this a signal that was given on Premium Plus, or was it a trade you've taken by yourself? And it'll mark that in your trading journal to give you some statistics. How many signals or how many opportunities for Premium Plus were positive by how much, and how many trades did you take yourself positive by how much? So we're going to make some tweaks to that. However, for the time being, a really cool trade, and even if you're starting, a really cool tool, and even if you're starting out for the first time, I'm just putting this over here. Just bear in mind there are two MT5s here, one behind, one in the front. I don't want to max this out, but just bear with me, right? So a really cool trading tool for a couple reasons. The first reason being that you can set your risk configuration. So right here next to my face, you'll see somewhere over there, the risk percentage, right? So if you go and say to the system, listen, of my account, I don't want to risk more than 3%. You put that in there, right? And then the markets are moving. Let's say we provide some price action and you're saying, okay, listen, here's the stop loss, here's etc. A lot of people struggle with calculating their risk or putting their risk in the right place, right? They really, really struggle with that. So instead, what you do, let's say we're buying here and the risk or the stop loss needs to be below that area there or below some other area, whatever it may be. You put that exact location in. If you say 3% risk and you hit buy, it will open based on where your stop loss is, a certain lot size that even if you're wrong, even if the trade goes pear-shaped, your trade is limited to 3%. That's the first thing. So for those of you who are struggling to do the right risk management, this will sort this out for you. In addition to that, if you want to go ahead and set up pending orders, right? Really, really cool stuff. And what you're able to do now with a pending order is you're able to set it into pending order mode. There's a couple things you can do. The first thing is we're able to literally drag the pending order, right, while seeing all the information available to us. So we can physically drag the pending order, and depending if you move it above or below price, it'll go into a sell stop, sell limit, whatever the case may be. The nice thing about this, and this is something that we've known for years but never really worried about too much, is that the liquidity providers and the brokers can see your orders when you set them up. Okay, the nice thing about doing it through a software like this is only when it reaches that level does it create the order itself, right? So for those of you who are worried about your stop losses being seen or whatever the case may be, this doesn't actually put the stop loss in place until the order is activated. So that's one good thing. The second thing is it'll also then work on the risk that you're setting, right? So let's say you're setting a pending order up in north of price because you want to or below price because you want to sell. We can literally go ahead and say, okay, you want to sell, and we want to create that stop loss. We'll put in a lot size if you want to. And let's have a look here. We're going to set up a, let's say we want to do a buy, right? Buy limit, buy stop, whatever the case may be. We can then set it up this way, right? So the stop loss for the order would be down here. You want to set up a buy stop there. It will tell you it's 107 pips on gold. What is the risk reward? So you can make sure that you're not just, setting up some weird setup. You're right. You always have more than 2-to-1 or 3-to-1 risk reward. And you can just literally enable it, right? You can click it and it'll go ahead and activate, and you'll get an error if it doesn't work, or whatever the case may be. The great thing is you can choose a couple things here. I will be sending a user manual for this. So again, if this is a little bit complicated, I will be sending a user manual, what you do, how you set this up, and how we'll be utilizing this for NFP, because NFP moves quite quickly, and to open up a bunch of trades, to close a bunch of trades, doesn't work. It sucks, right? So rather taking predetermined risk and setting it up and saying, great, when you get here, create an order. When you get here, create an order. The nice thing about this is you can tell the terminal, do you want to just alert when price gets there, or do you want to trade when price gets there, right? So it's a great tool that even if you want to create alerts at those levels, you can set it up. It'll send you emails if you want to, etc. So we found this is a really great free tool. And what we're going to go ahead and do is develop something customized for DVDM markets. But for the time being, it serves as a really great tool. Now, a really cool thing, another feature that I really love, is there's a break-even checkbox, right? So if you're in buys and you check this box, right, it'll say it'll give an error because I don't have an open trade on this account. But if I click break even, it'll immediately move my stop loss to break even on either the buy or the sell. So the great thing with something like NFP, you don't have to go and drag orders and hit OK and whatever the case may be. So it makes it super simple. So I'm going to send through this file on how to download it, how to plug it into your MT4, into your MT5, as well as some basic navigationals. And then when we go live tomorrow, we have about 20 minutes prior to the NFP data release, I'll be showing you the setup step by step, right? What to do and how to use it. But please go ahead and test it tomorrow. Tomorrow is not about teaching you how the software works. When I send through the file and the instructions, that's for you to go ahead and do in your own time. And you may want to learn this at a later stage, no problem. But it is a great tool to make sure you don't exceed your risk profile, right? I see a lot of clients send back, their trading journals, say, hey, I need a little bit of help. How do I deal with this? Whatever the case may be. And I look at the risk that they're taking, and they're taking 30-40% risk on an account. And when it goes great, amazing, right? When we're hitting these long trades, we're in huge profit, amazing. It takes 2 or 3 bad trades and that account is wrecked, right? So risk is really going to be a huge focus for us in this next season. This tool will be a great temporary fix, but we are developing and custom coding something specifically for DVDM markets that works for us, our trading style, and what we do on a daily basis. What is very cool as well is directly to your terminal, right? We're going to be able to send the same scripts we send to Premium Plus. So when we're sending on Premium Plus, we're buying US30 at these levels, it'll physically pop up as a message within your terminal on MT4. So you can see the levels right there. You don't have to have your phone, you don't have to have different applications open to see the type of trades we're taking. It'll pop up right there. That's been something you guys have been asking for. You've asked, we've listened, we will be delivering that through to you. Okay, now in order to keep this a little bit shorter, because we are overrunning by a good 20-30 minutes, this Saturday at 12 o'clock, we're hosting the first Premium Plus training session since we've started Premium Plus a couple months ago. And this Premium Plus training session is only valid for those of you who have active Premium Plus accounts. So meaning tomorrow the team is checking. If anybody's got an expired account, you don't have an active account, please go ahead and resubscribe. Make sure that account is active and that you have the bare requirements, meaning that your HFM account is funded, that it's linked under the DVDM Markets affiliate link, etc. That all needs to be checked out. Only then will you get a link to attend Saturday's training session. And again, Saturday is going to be about the exponential money multiplier strategy, how to use the market's money to make more money for yourself, or utilize the market's money to open new trades, not your own equity. B, we're going to be going over the golden nugget in quite a bit of detail. There's 2 areas every day the golden nugget happens, and we've seen over the past couple days the golden nugget will happen, the move will happen, we see reversal. We've mapped out a way to catch both of those moves as well as a strategy to capitalize on both directions. So that's that thing. And then we're going to be taking some questions and answers and dealing with some additional things in that session. So we're going to be spending about an hour together on Saturday. It's a closed group, closed community. You're allowed to ask questions. It'll be a little bit more of a free-flowing thing I'm presenting. We're going to be putting together some notes that you'll be able to take away from the session and reflect as we trade the markets over the course of the next week. But September is going to be big, and I want everybody prepared. I want everybody equipped. I don't want anybody left behind, because I love to wake up, go to the gym, come back and see a bunch of you have taken, profit on the golden nugget, a bunch of you in profitable positions. There's nothing that makes me have a better day than to see you guys killing the markets through something that we've imparted here at DVDM Markets. So again, I want to make sure everyone's equipped, everyone has everything they need, the tools, etc. So this evening I will send through this, I don't know what we call this piece of software. We'll call it something for the time being, this trading assistant, if you will. Make yourself familiar, get it installed, get it downloaded. We are going to be utilizing a portion of it for NFP in order to trade, but more than that, we're going to be looking at opportunities. I don't think the fundamental data that came out today is enough to really move markets or change the direction we're currently in, but we obviously have to observe what the markets give us over a period of time. At the moment, as I said initially, I do think the markets, or the dollar specifically, would take this as a positive. Initially reacted negatively, is sort of taking it a positive. And as I said a little bit earlier, I would be expecting some sort of corrective move for gold, some sort of corrective movement for US30 as well as US 100. But again, I would like to be in additional long positions on some of these items. This is a great thing for us on our Euro USD trades, on our Euro USD CHF trades, because again, it's going to get us closer to that entry point at the point where we get the NFP data tomorrow. So again, if we get right up there, right on USD CHF, it's going to give us a deep, great long-term entry towards those shorts, provided the weaker dollar data. And the same thing would be true for Euro USD. If we can get that nice deep entry at that one euro buying, $1.08 and 25 pips, beautiful entry. It means again we can hold this for weeks at 500 pips per trade, and that's going to be the ultimate goal. So even if we don't necessarily trade anything for today, it's all going to be about prep work for tomorrow. And again, this NFP, as I said in the start of the broadcast, is unlike any other NFP we've seen before, because of the time and place that it falls in the US economy, in the world that we're living in, and just what's happening in the world and why this is so important. It just falls in a very unique time and space. So we're gonna have to treat it a little bit differently. It has the potential to absolutely move markets bigger than we've ever seen before, but also has a potential to be, one of those anticlimactic situations. Data comes out, markets say, ugh, and it is what it is. But it's about showing up, being prepared, and obviously taking action should the results come out that we're looking for. Now, just to be clear, we're not trading NFP for the sake of trading NFP. We're waiting for very specific things to happen in order to trade it. So we may find ourselves in an event. I just want to say this is a worst case scenario. We may find ourselves in a situation we've spent hours, days preparing for that event. We arrive there, we've had good sleep, we've been to the gym, we've eaten well, we've meditated, we've done all the things we need to do, and we don't get the results we want, and we don't take a single trade. Right? We're not trading for the sake of trading. We're trading because the markets are giving us signs that our entry conditions are present. So I just want to make that clear. It's far better to show up 10, 20 times prepared and have nothing happen, but then the 1 or 2 times it's a life-changing trade, than to trade 20, 30 times and try and blow out your account. So just to be clear, that is essentially what we're looking at. So guys, listen, outside of that, much love for sticking it through probably one of the longest daily doses we've had in a super long time. But again, I just want to make sure everybody is prepared for NFP tomorrow. That is what the big deal is all about. But other than that, we wrap up essentially August. It's been a record-breaking month. So we've had weeks of, days of 5,000-10,000 pips. It's been a fantastic month. And if you've been a subscriber for August, just a massive, from the bottom of our hearts at DVDM Markets, thank you for being here, for learning, for taking your own financial future into your own hands, and supporting the vision that we have. Again, as many of you do know, what we do at DVDM Markets, we technically lose money. But again, this is a passion project. What we believe is our mandate to take what we found, the things that's changed our lives, and impart that to every single person that we physically can. This is one of the ways we found how to do that. It changed my life. It can change yours. Just keep on keeping on. That's what it's all about. Outside of that, guys, it is time for me to dive back into the markets. Turn off these super bright lights. If you see me getting a little bit red and roasty, it is hot and these lights add a bunch more heat. I know I saw Luke Lewis saying give that man a coffee. No coffee is needed, it's just super hot in the studio. Outside of that, guys, much love as always. Be safe, trade safe, you know the drill. And until I see you a little bit later, if I take a trade, it'll be right in the group. Premium Plus is where it's at. If you're watching this after the fact and you're not part of Premium Plus, I don't know what to say. I don't know if I should say have a shot at tequila and go play in traffic, because life's already quite bad if you're not on Premium Plus. But if you changed your mind, link is down in the description below. Jump in the group and our amazing team will help you get signed up for less than $1 a day. Get everything you need and so much more in the financial markets. But until then, you know the drill. I'll see you guys a little bit later.